Hello there, this is the second part of tutorial series 4 of bite-sized corporate reporting. Continuing from part 1 on impairment of assets, the next issue applying IAS 36 is how to determine impairment if the goodwill cannot be meaningfully allocated on consolidation to the individual cash-generating units. In such cases, the impairment assessment would be carried out in two stages. Stage 1 would be on each individual unit, while Stage 2 will be to carry out an impairment for the combined units, including goodwill. In Stage 1, no impairment loss shall be recognized for Unit B and C, as the value in use of Unit B and C is higher than the carrying value of its net assets. However, an impairment loss shall be recognized for Unit A, as the value in use of 72 million is lower than the carrying value of 85 million. An impairment loss relating to a cash-generating unit, CGU, according to IAS 36, shall be allocated between the assets in the CGU in the following order. First, to assets that are obviously impaired, second, to any goodwill allocated to the CGU, then finally to all other assets within the scope of IAS 36 in the CGU on a pro rata basis. So, how should the impairment loss of 13 million relating to Unit A be allocated? In the case of Unit A, as there are no assets that are obviously impaired, nor can the goodwill be allocated to the individual units, the impairment loss of 13 million, being the difference of the carrying value of 85 million and the value in use of 72 million, shall be allocated between the following assets on a pro rata basis. No impairment loss is allocated to the net current assets, as these are outside the scope of IAS 36. For example, inventories are subject to impairment via the measurement principles of IAS 2, whilst receivable are subject to impairment under IFRS 9. Stage 2 would be to carry out an impairment loss for the combined units, including goodwill, as follows. Note, the carrying value of Unit A is revised to 72 million, having accounted for Stage 1 impairment. The combined carrying value of all three units, including goodwill, of 267 million is higher than the recoverable amount of 205 million, resulting in an impairment loss of 62 million. The impairment loss of 62 million should be allocated to goodwill. As a result, the carrying value of the goodwill at the reporting date of 31st December 2023 shall be written down to 18 million. Please be reminded IAS 36 does not permit the reversal of impairment loss on goodwill. Included in the description is a link to a shorts video explaining why IAS 36 prohibits the reversal of impairment loss on goodwill. Thank you.